Hello, folks. Brandon Chapman with you today. It's a Theo Night video for Monday, April 3rd, 2023. And boy, in Utah, it sounds like it's more January 3rd as we've got several inches of snow. It's supposed to snow all day. So I'm waiting for this snow to be over. But anyway, the market seems to not be worried about it. It's grinding higher at the moment, 20 minutes to close, 15 minutes to close. Looks like we're angling to retest 4,200 plus. Today, the story is energy. Commodities generally, see XLB in here, but gold and silver option activity happening, a lot of it happening today. But anyway, the big story of the weekend, obviously, OPEC, Saudi Arabia, China, all this stuff going on. Bottom line is cut of production, right? OPEC is producing less oil, which right now, if we look at Forge/CL, oil prices are jumping today. But look, the fact of the matter is, with all the oil that's been released from the Strategic Petroleum Reserve, the thought that they might buy oil down here, the shorts kind of following the heels of the banking crisis. Obviously, we're angling towards recession, but just, again, it's one of those things where it just doesn't always happen right when you want it to. And obviously, today we're seeing a bit of a short squeeze, shorts covering themselves in oil and oil stocks. Oil rocketing higher today on the lower output. And that cartel, that those agreements they come together. The reality is that those agreements hold better when there's less chance of a decline in oil prices. And so again, with the Strategic Petroleum Reserve, with cuts of production, and right now prices going higher, we got the squeeze. All of a sudden, they're in a position where they're probably going to hold together for a little while, despite the potential impending recession that's upcoming that should generate lower oil prices. Just structurally, fundamentally, oil's in a pretty good position right now to squeeze higher seasonality wise. It generally does well in April and May to the beginning of June, this time of year. And so oil prices predictably moving higher as we're kind of hitting spring in other parts of the world, not Utah. But anyway, as energy is the top performing sector today, up 4.5%. And the option activity was significant across the energy sector. And so anyway, let's take a look at the market and just kind of discuss where it's at, where it's going. And I'm going to use the SPY here, where we've broken through some key levels. Today, we're maybe inching above the high from December 13th, clearly en route to close to 420. But that tells part of the story. The other part of it is the VIX, the volatility, right? The volatility of the market is what really kind of sets the tone in terms of expectations for future volatility. And after opening higher today, you'll notice the VIX is falling back towards support again. But one of the disappointing things, at least earlier in the session, we didn't really see the VIX curve steepen, meaning that 3-month volatility rising relative to 1-month volatility. In fact, we're ticking back today. And so the 3-month VIX is only 12% higher than the spot VIX. This really does begin to open the door that if we don't see any VIX selling to really drive this ratio up, the yellow line here, it does open the door to potentially higher levels. And there have been those that are kind of feeling, the market's in a good position to rally. And obviously it's kind of guesswork, but you know what? The way that volatility is angling right now, we might see 430 before it's done. And so it's one of those things where it's good to be cautious, but probably still cautiously bullish. Although there are some areas that may be setting up at the moment for a bearish opportunity, in whether it's real estate or some banking stocks, and particularly regional banks today. Maybe some cyclicals, but for the most part, banks, real estate, home building, that kind of thing. So let's look at the other markets. So let's look at gold, Forge/GC. The gold space, gold was higher today. Notice gold futures are testing their highs, and GLD is just a little bit off of those same highs. But again, it looks like gold does want to rally here, because if the market's going to continue higher, you would expect that it should be on a weaker dollar. Now, gold is a representative of the dollar, and certainly today, dollar's weakening. You could look at UUP as a proxy of the dollar against foreign currencies, mainly the euro. You could look at specific currencies like the Aussie/US dollar, which is more representative of emerging markets and specifically China. I realize this is Australia, but this is a proxy for that. Australia economy is very tied to China as well. but a breakout today in the Aussie US dollar, looking to retrace some of its past movement. And let me just remove this and bring in my fib. So, we expect to probably see a 1/3 to 2/3 retracement, potentially a full retracement. If this does continue, there was some bullish activity last week in like KWeb, for example. We may see Chinese stocks start to pick up quickly off of the lows. FXI, of course, BABA was in the news last week, but got the big breakout here. But we may see further movement in emerging markets and predominantly Chinese stocks as well, using the Aussie as a kind of a proxy for that. But that does assume that the dollar remains its weaker pace. Now, what is the story regarding oil, and how does that impact the inflationary outlook? Well, look, higher oil prices raise the headline numbers for CPI and PCE and things like that, but it doesn't necessarily raise the core, since it does strip out food and energy. So whether or not it directly affects Fed policy, if oil starts to make a big move here, it's probably going to put pressure on the Fed to do something. If we look at the product depth chart, we can look at /CL. What you'll notice is that the curve is in backwardation currently. We started to get more of a flatter curve, and then it dropped off. We saw a little bit of rise and then fall, but now we're pretty squarely in backwardation. Could be steeper out here in the first couple of months, kind of flat and then drops from there. But the fact of the matter is the oil is in backwardation. Why? Well, what creates these dynamics? Well, the reason why this contract's lower than that one is that the net cost of carry is positive, meaning when you consider financing and storage costs, the amount that you can lease your oil out for is higher than those costs. And a function, you get this declining curve, which means these forward prices or future prices is being driven up to the spot. We're seeing upward pressure as there's an implied shortage. And so all of a sudden we're in a position where oil has potential due to seasonality, due to kind of geopolitics, the fundamentals. We're seeing oil inventories decline here, higher oil prices. We are opening the door here for higher prices in oil specifically. Could we see $100, which is around the 61% retracement level? Absolutely, it's a possibility. Is it likely? I don't know. It's like, this is kind of one of those circumstances where you just kind of go by feel a little bit, and looking at today as a kind of an opening the door to a bigger move, and then looking at the news from like OPEC, for example, and you're looking at the backwardation in the oil futures market, and says, this may have more legs. And so again, watch for oil prices rising, and specifically, there was trade in USO today, which again was up 5.7%. In USO, this tracks the near month futures contract for oil, with oil in backwardation. If you roll from this contract to that contract, you sell this and buy that, or sell this and buy that, you're actually rolling at a credit. So the market structure for oil is not negatively impacting USO like it normally does. And so right now you'd expect USO to track oil pretty closely and maybe even have a chance of outperforming a little bit, because if there's a positive roll, it's making money on those rolls it does every day. But in a USO specifically, this was a 21 April expiration out here on the 71 strike and 74. And so what you're seeing here, this was a kind of a ratio vertical spread, buying more 71s than you're selling 74s. But again, gives you kind of the idea that there's some near-term upside, maybe at least a 74 in the next 18 days. And you look up here, that's basically breaking out. 74 is right about here. Certainly seems pretty reasonable. And if we look at the pricing of this spread, basically the implied volatility, is it in a terrible position? Not exactly. You're buying 35.5 and selling 34.7. There's a little bit of an impairment here. You can obviously, push it up a little bit, 73, 74, but going 71 does lower your break even a little bit. And if we're seeing backwardation and pressure, 74 seems like maybe a reasonable expectation for the next few weeks here. Also in the energy space, Oxy, of course, this is Warren Buffett's favorite. Discussed back here previously in my daily sessions, bullish activity in Oxy and XOP. Got the breakout. We saw another breakout today. And if we take this initial kind of wave right here, this seed wave, Notice how we only gave back about 61% and then we bounced. Next target's 138 to 161. Well, we're breaking out of that. So the next target is up here. And this ties in with the 61% retracement of the downtrend. Really ties in around that 68.50. Basically 67.5 to 70 is the target range for Oxy currently. But don't overlook the possibility that if oil prices continue to surge, that the 423 may be in tow, and we may see Oxy, once again back to about 76, 77.50 up here. So don't underestimate the potential movement in energy with oil and backwardation. It's a real possibility. We could see a decent size move, but near term, we're talking probably 70 to the upside before we see some sort of retracement if we don't catch it earlier. You could use today's high as a trigger if we close above it, or otherwise look for the low today to hold and then bounce off of it with a swing to $70 here. So that's Oxy. And it wasn't confined to Oxy. Exxon today. Exxon, huge move. Almost finished here in the high of the day, up nearly 6%. Volume was above average as well. This was the 115, which is basically at the money, but it's a 6 April, so the weekly expiration really kind of tied to here. But notice how if we look at a 1 day, I'll look at 1 day, 1 minute, it was kind of stalling out here at about 116, kind of broke through it, came back around to it. But notice how we kind of hung above. We broke through, creating a little gamma squeeze there. 115 held up and continued to leg higher. But again, look for this, near-term targets about 119.50. If we do a fib target, we're looking at trend target upwards of maybe 123.50. Expect to maybe see a test a low of 113, or if we break out, we may run quickly to 120 to 123. But even bigger moves in tow if the dollar remains weak and oil remains relatively strong. I'll end up with MRO. There was others today, but these are the ones I kind of picked out here. But again, gap up. We're looking at a near-term target to around 28. We've gobbled up a lot of it, so look for the low today to hold in MRO. But the potential swing is to, in the coming weeks to months, upwards of $33 to $34 in MRO. That's the strength on the initial seed wave, and the second leg carrying it to 223 certainly opens up the potential for additional upside in MRO. And today, this is more of a combination, synthetic type trade in MRO. This is for the May expiration, basically selling the 23 puts and out here buying the 28 calls. So you're using the put premium to help pay for some element of the call premium as well. So you're cutting it down without capping your upside. You do have more margin because of the margin is held by selling puts. But as you look here, you're not impaired too much if you're looking at upside call spread in this. In fact, I think we're looking at a shorter amount of time earlier today, is that you could put on like a 27.29 where you're buying 38%, selling 38.5%. And that creates a 2-point spread for less than 40 cents. So you risk like less than 40 cents for about $1.60 plus of upside, 4-to-1 ratio. That's assuming we get to 29, which is certainly in the ballpark in the next 18 days as a possibility. Low probability, but high reward, low risk. But anyway, so the energy trade is certainly, you're seeing a lot of interest kind of kick up. We'll kind of wrap it up with XOP and XLE. I forgot about the ETFs, but XOP, breaking out here. Again, this is kind of a double bottom formation, 124 to 114, 10 points, 134. We've basically gotten that target, but the next line of resistance is around 141.50 to 146. And so again, if we this is kind of flipped around here, but if I take 143.50 as kind of the trend target in the coming weeks with the possibility of getting back to 160 for XOP, and the specific trade in XOP today, it was a May expiration. Scroll down here. And so what you're seeing is a roll. There was previously at 132, 148. We've gotten in the money there. Opportunity to cut risk. So they closed that out, bought the 143 and sold the 160. Selling more 160 than buying 143. 160 gets you back to prior high. So 143, 160 is a ratio vertical spread is kind of was put on today in XOP. Again, targeting kind of that 160, and that is the closing bell. Kind of target that 160 area. Finally, we'll wrap it up with XLE. And this stuff isn't hard to find. I have a scan that I use and I share with our clients and that are members of TheoTrade. And it's on and we have a shared page that has all that stuff where you can just use it for your own. And every Monday I go through this stuff. But XLE today, again, at 4.5%, big move, top performing sector. And you start to look back and say, well, how much opportunities here? We're at the 61% retracement right now. If we start to take out today's high, next stop is $93.50. And for XLE, which you saw today, was the May 90. So we walked through a lot of the interest today that was in XLE. But the one we looked at was May 90. We saw other stuff kind of filling in May 92, May 98. There's probably more that kind of crept in, maybe on the put side as well. But what this is doing is we're seeing a lot of option activity, call option activity, bullish activity, step in on a big up day where you might expect that, boy, we might be stalling out here. But the fact is the dynamics with oil does help create opportunity for higher prices in the near term. And so again, we may see a little bit of a pullback tomorrow. It's a big day today, but look for this thing to continue. So I'd look for the low of today to hold, or look for a higher low on the bounce, or a breakout of today's high if you're looking for a trigger. Okay. Let's turn around and let's look at gold. So with a weaker dollar, that generally means higher gold prices. And if gold's going higher or is stable, it generally means higher gold stock will producer prices. And a couple of those stocks today that saw bullish option activity, and KGC is one that I've been following daily, almost in our daily chat that we do. More option activity today in KGC was the May $6 strike price, which basically gets you back close to prior highs back here, right? $6. So while again, you think, wow, we're pretty overextended, this is not a comfortable position. You might use today's high as a trigger. So if we trade through it, that could give you an opportunity to consider something in KGC. But again, this is a stock that's continued to see flow over the last couple of weeks here. And the stock just keeps moving higher as the dollar is weakening at the moment. Another gold stock is AIG. AGI. AGI, again, another one of a couple of times, a few times the last week or two. AGI continues to storm higher. And in this case, if we look at June, the June expiration, you'll see again out here the $15, $17, $50 strike price mostly bought. So again, we'll see how much of this carries over as open interest, but significant option activity in AGI on the long side of it. Again, we're 1750. It's way up here, right? 15, 1750. Is it possible? Well, again, when you start to consider that this is a June expiration and we're starting to look out there a bit, I mean, you look at the high from 2015, it's about $17, right? So is it possible these kinds of stocks could migrate? And notice how we're breaking through the 61% retracement, could migrate back to 17.5. Now, this one did not experience any bullish option activity today, but did have a couple of them last week. Again, near-term upsides, maybe 419, but you back this out and you look at this from a longer time frame, what you see is that, look, we're in the midst. I could probably go longer than this. Actually, it's not with you, but the idea is that we're looking at this stock could potentially go to 750. And from a valuation and other perspective, this is not a bad valuation level for BTG. We're seeing strength here, but man, we start to get traction before 20. We could see ourselves going back to 750 on it. There's a decent amount of upside in some of these gold stocks that continue to see bullish option activity. And it just didn't end with gold. It also was in silver. A couple weeks ago, I went over stocks like CVM. This was back on the back on the it was on the 20th. Yeah. So back on March 20th, I mean, so we saw the rotation of silver right here on the 20th, SVM, Pan American Silver. I mean, there's several of these stocks, wheat and precious metals. you just saw back on the 20th here some flow into silver and silver producing stocks. And it's been okay since then. Now, as we look at SLV, last week I walked through some option activity on SLV, in which today we're getting some added activity at these levels. This is out here for January. And so in January, we come out here to 2024, scroll out of the money out here, 47,000. Now the volume is less than the open interest, but we saw 88,000 being put in here on the 37.42, 47,000 more today, adding to that long call vertical, buying the 37 and selling the 42. This is way the heck out there. Very improbable that silver gets there, but it's also priced that way too. You're paying very little. But again, this is representative of money flow in this one for January. So what does this mean in terms of precious metals? And I'm going to use GLD here. It means that what? I mean, the Fed may be, within the next few months starting to cut rates again. And there's probably at that stage, if they're cutting rates, we're probably talking about recessionary pressures and probably some sort of financial issues, insolvency issues, stocks declining substantially, a lot of weakness, in which case the Fed comes out. If they come out with a bazooka, guess what? This is where gold and silver could rise dramatically and see a lot of mid-year to end of year option activity in gold and silver specifically. Again, it helps create this kind of an atmosphere where it could run. And again, that's likely to happen after they start to cut rates. Well, guess what? In the interim, if the Fed is easing off its interest rating, as traders ease off their Fed rate increases, this helps create a weaker dollar and stronger gold. But I do expect that as we approach summer, there's probably be some sort of bigger pullback in gold before the Fed actually steps in and begins to actually ease by cutting rates, which may be by September, maybe by the end of next year. We just don't know. But there's been substantial option activity in gold and silver stocks. Now, it's not the first time that we've seen this. In fact, if you go back to gold and silver on January 3rd, 2022, significant activity up here around 200 on GLD, very high in silver. None of that came to fruition. So again, it's a very small risk for high potential reward. And so just understand that these types of trades, very small probability of success, but huge upside if you get it right. And you may have a chance to take a few swings, but right now seems to be one of the better opportunities as the Fed may be towards the end of the rate hiking cycle and more of an indication of recessionary pressures. But in the near term, of course, what may keep the Fed on board with raising rates is inflation. And there's been a number of these trades in tips over the last couple of weeks here. I discussed one a little over a week ago in my daily session, but tips are finally kind of breaking out here. Volume's above average, although volume's not super extraordinary important for ETFs. But on TIP, it continued to angle towards the upside. This would benefit not just by inflation, but also falling interest rates. So you may get it in one of two ways. And in this case, boy, I forgot to write down the expiration month here. Let me just clear out the time and sales data. Because here is September 15 SEP. And you see a building out here, right? At 118 and 123. 0 open interest, 2 open interest. This is new activity. Buying the 118, selling the 123, really looking for upside. And again, what could carry it to 123? Well, the Fed cutting rates could carry it there, right? But also the outperformance if inflation is more of an issue. So again, it may lag treasuries for a little bit, or it may surprise right now if oil price went higher. But the idea is 122 is kind of the upside here by September. So again, it's probably going to take the Fed lowering rates by September to really create this upside. And again, inflation expectations may help to cause us to outperform treasuries or standard treasuries. Now let's circle back to banks, because this is the one area that there is significant issues. Now, obviously NYCB, New York Community Bank, had a huge gap up here. The problem is we've not really solved the problem. There's not really a solution. We've actually almost only just made it worse. So when do we start to see the fickle finger of the bank, the retail banks, these regional banks, when the fickle finger of consumers start to pull their money out? Again, it's gonna be hard to say, but The idea is 850 is kind of that support level. We're down today about 4%. And if you look at NYCB, this is a May expiration at the $8 strike price. So again, 39,000 today, mostly bought at the $8 strike, looking at a breakout, not just of this support, the next level of support. And we're starting to look at the very possibility we may close below the low of the gap day and close the gap back to 660 again. So again, these kinds of trades, buying it just a straight up put at $8 is rather expensive because the volatility is up. You could construct a vertical spread. You could buy an 8, sell a 7, buy a 9, sell an 8. That will help create more stability and more opportunity if it doesn't move just dramatically lower. But if we get a move back to 6, again, you could buy the 8 and sell the 6 here for probably about 20 cents, maybe 25 cents. In that case, maybe you just elect to buy the 8. But the point being is you got plenty of time to see if something breaks in the next 48 days. Break even is going to be down here close to 750. Anything below that by expiration adds to your profits, potential profits in this trade. CFR, another financial company, right? Cullen/Frost Bankers. We saw the down move. We did not see the short squeeze higher. Looks like we're forming a flag. Volumes dropping off here, looking for a break out to the downside. But again, CFR today, we're looking at a May 95. 95's here, retest the prior low. So at least a retest the prior low. We break that, we're probably going to even lower levels, but something to watch for. Now, finally, Citigroup in the banking space. I'll get to a couple of fun ones I talked about on Friday as areas of opportunity. Citigroup, it's made a really nice move here. We bring up the expected move study. You'll see that we were above the expected move on Friday. And so what an opportunity to maybe consider, probably close to 2 times the expected move on Friday. What a time to maybe consider an in-out spread ahead of the earnings, looking for some pullback or test of the lower expected move, maybe a little bit lower. Because today, again, what you're seeing is bearish option activity coming in. This is for this week at the $45 strike price down here. Sorry, $45.50 strike price, 6,600 contracts. And again, 45.50 gets you to about right here, but that would indicate a breakout. Start to break through the lower expected move. We could see a sell-off back to about 43, 43 and a half down here as support. So one other one to watch in the banking space is, again, higher commodity prices may place more pressure on financials. Finally, 2 stocks that saw significant option activity today. One is SOUN. These companies are in the AI space. And so I saw kind of an AI theme on Friday that I outlined in my session. These are 2 of the stocks. There was also unusual option activity as well. So again, bottom line, big move yesterday, another 16% move in SOUN. And the trade today in SOUN, again, looking at more upside in this product. And again, we're a little bit overextended, so it's probably more fun to look at this point, but at the $3 strike price for this week. So the other one is BBAI. And again, this is one that popped up on Friday. I saw rotation into artificial intelligence just by performance based on the move on Friday. And there was a significant option activity. The stock was up nearly 30% today. And again, more activity coming at the $3 strike price. Again, this is just creating just more and more flows into these companies. And for some of them, they have significant short interest. Although these 2 specifically don't have any significant short interest. But what we are seeing is big movement helping precipitated by the option activity. These are things that I look for every single day. These kinds of setups, and then you're seeing the breakout here, good volume, significant option activity, and again, more today as well as others out there. So this is stuff I do every day in my sessions going through this. But again, I hope this is helpful, just kind of helping you identify opportunity, making sense of things, and we'll catch you back next Monday on the video. Have a good one. Thank you.